Is the GTA housing correction changing shape? November 2025 market stats breakdown. November data changed the conversation. November delivered upside surprises in jobs and GDP. Housing data revealed the correction entering a deeper stage. Stability in the economy is not the same as balance in housing. The signals now matter more than the headlines. Ciao. Welcome to a new episode of helping you build wealth through real estate, brick by brick. With me, Nico, James-Bock, a broker at Keller Williams Co-Elevation Realty and the founder of the CondoWiz group. I am based in Toronto. This is the moment where the market starts rewriting its own rules. Jobs are supporting confidence, not driving demand. Employment rose by 53,600, and unemployment fell to 6.5%. Job gains focused in part-time and private sector roles. Youth hiring rebounded, improving entry-level stability. Immigration caps tightened labor supply. Wage growth at 3.6% remains controlled. The key, employment is reducing fear, not creating urgency. Prices are resetting quietly and consistently. Average sale price is now at $1,039,458, which is down over 6% year over year. MLS Home Price Index down nearly 6%. Month-to-month pricing is largely flat. The correction is steady, not volatile. These stats are a carryover of the last month's stats and a carryover of the last market update podcast episode. You can check that episode out in the roster. This is what balance looks like before confidence fully returns. The correction is no longer even across housing types. Detached homes, interestingly enough, while still the most popular housing type, are now the weakest segment in terms of price appreciation. Detached prices down 8% year over year across city and suburbs. Traditional resilience has shifted. Buyers have negotiating power, not seen since pre-pandemic. This covers all sectors, housing types, and locations, at least in the Toronto GTHA as well as Vancouver. The housing ladder is adjusting from the top down. Downtown condos are quietly stabilizing. So focusing on Toronto area, 416 condo prices down only 1.7% year over year. It's the second consecutive month of relative price resilience. Sales are slower, but pricing is holding. It mirrors early 1990s patterns where condos found their floor first. Employment, transit, and proximity matter again. Those condominiums that are closest to major transit hubs are the ones that are most popular. Those that are fully in the employment sector with full-time or even part-time employment are the ones that are making their moves. Supply pressures are structural, not just cyclical. Active condo listings at record levels for 19 straight months. Rental listings near November records outside the pandemic. Investor unit staying longer in the rental pool. So those are hanging around longer as rentals as opposed to resales. Estate and power of attorney listings are also up, but 10% year over year. Up 78%, so almost 80% over the past decade. Demographics are now feeding inventory growth. Mortgage rates, the Bank of Canada, and borrowing reality. Pricing gaps between advertised and negotiated mortgage rates remain quite wide. Lenders want volume, but they're saying it quietly. Credit unions and monolines remain highly competitive. Bank of Canada heading into December the 10th. Their primary mandate remains price stability. Economic resilience reduces urgency. Softer demand keeps optionality alive. Market implied probabilities? Well, the rate hold is sitting at approximately 55 to 65%. Rate cut, 25 basis points, is sitting at approximately 30 to 40% probability that would occur. And a rate increase, it's under 5%, so highly unlikely. Execution matters more than timing the announcement. Those that are in the market, ready to buy or even to sell, should do so without hesitancy. Where this leaves buyers, sellers, and investors. Buyers, detached homes offer choice, leverage, and value not seen in years. For sellers, pricing discipline and patience define success again. That is sellers with all sectors and sellers of all home types, especially in the condominiums. Pricing discipline and patience are key. For investors, downtown utility and rental demand are stabilizing the core. These are all core sectors, so all of the major centers. The focus should be on utility and rental demand in those areas. The November data confirms a market searching for balance, not collapse. The cycle is quite familiar. The details are different. The opportunity lies in reading the signals correctly. So stay tuned, stay sharp, and stay ready. The next and final Bank of Canada announcement is Wednesday, December the 10th. And the final inflation rate announcement is on December the 15th. And as always, I'm here helping you build wealth through real estate brick by brick. If you found this information useful, then like this podcast and or leave a comment. I'm always interested in hearing what you have to say and what your experiences are in this current climate. Please share this episode with anyone who may find the content useful. Ciao.